Hello guys, welcome back to Just Invest Today. Today we're going to talk about JD.com's earnings Q2 2024. I thought they were amazing. I'm super excited to present the news that JD.com might be my favorite holdings at this point because I know it's super undervalued and the market doesn't care. It's selling it off still. We just had Walmart selling off all of their stake in JD.com, crashing the stock. JD.com announced that they bought back the stock. I'm super excited for the future of JD.com because I think they are going to explode. We know we have the BABAs, the PDDs, but man, JD.com is so under the radar. It's like unfair at this point. So let's get into this video. Let's talk about it. Let me show you what I'm seeing for JD.com and the future potential that it has. So Q2, JD.com net revenues only grew 1%, which isn't the best, but you got to take it in that the management is telling us that they want to get back to like around 6 to 8% higher than the averages of like the overall market when it comes to e-commerce. So I can believe them that in the long term, they're going to do around 6 to 8% revenue growth in the next 5 years on average. Do you guys believe what management is saying? I believe it. Remember, they were doing 19% from 2018 to 2023, which was amazing. But yes, they're going to be slowing down. They are saying that they're going to improve the revenue growth and they're going to kind of mix it. They're going to kind of mix revenue growth with profitability. So I'm super excited for that. We have electronics and home appliances down 4.6%. And this is like their main category. And they're saying that they had a high base last quarter. So we can kind of see that contracting. But overall, this section is still going to grow into the future. So I'm not too worried about that declining. Net service revenues up 4.1%. Their marketplace and marketing revenue is growing. They were talking about they're seeing growth in the 3P business. JD Retail up 1%, JD Logistics up 8%. And remember, their whole moat, JD.com, is that they're getting a lot more efficient because they have the whole connection when it comes to shipping and getting products to where the customer wants it. The user experience is amazing on JD.com, and that's what they're pretty much banking on, that people are going to come repeat at JD.com because their moat in that kind of service section is amazing. And this section right here is why I'm so happy for JD.com. Their margins are growing and now it's up to 5%. And this is amazing because they're seeing this section growing. They're saying they're going to have high single digits, so probably around like 6 to 9%, hopefully, or 6 to like 8% margin improvement. And this is just going to keep driving profitability because overall, we need to understand what's happening with JD.com and the undervaluation that JD.com is under right now. Guys, they have a 19% free cash flow yield. They're reducing their share count by 7 to 8% annually, which is amazing. They have a 2 to 3% dividend yield, and they're promising more shareholder return and just long-term shareholder value. So what more can we ask for? We don't even need to see revenues up a lot, or we don't need to see 20% revenue growth or even 15% revenue growth. If they're going to buy back around 7 to 9% of their shares annually, we don't need all of that. We just need them to stay at this price around $25 to $30, keep buying back their shares year after year with a 19% free cash flow yield and growing around 5 to 6% annually. That's all we need, and we can be happy shareholders. The stock market has to re-rate the company eventually. It's going to come. We don't know when, but it's gonna come eventually. We have JD.com producing around $55 billion of free cash flow. Remember, this is in RMB. So this comes to around like $7.8 to $8 billion of free cash flow USD. Remember, they're only selling for a $41 billion market cap, and that is increasing. You already see here the growth from 40 to $55 billion. So, man, I'm super happy with this performance from JD.com, and I'm happy that shareholders don't see this growth yet because it's just going to keep buying back their shares year over year, and I'm super excited for that. Now going over to the earnings call, and I'm going to show you the most important things for me when it comes to this earnings call. Right here, JD.com is going to lay out their strategy on what they're providing for the market and why they're going to be successful pretty much. And I see this actually happening and playing out. They're delivering on what they're saying. So that's why I'm super confident in just holding this stock long term. Facing a very dynamic and competitive market, we delivered a solid set of results, notably achieving the highest single quarter non-GAAP net profit in our history. Our team did a great job executing on our long-term strategy of relentlessly pursuing lower cost, higher efficiency, and best-in-class user experience. And we saw a set of key drivers of our business, including user growth, user experience, and engagement. So this is what I'm saying. They're seeing double-digit growth in just user engagement, people subscribing to their membership. We're seeing higher GMV growth. So everything right there is showing me that people are still engaging in JD.com's platform. And here just shows you the continued improvement from JD.com. Net margin in Q2 climbed to 5% for the first time. This was primarily driven by gross margin expansion to a historical level of 15.8% in the quarter, with an improvement in almost every category. As we focus on price competitiveness, our gross margin has been on an upward trend year on year for each and every quarter over the last 2 years. This underscores our improving supply chain capabilities that enable us to continually benefit from the scale and efficiency. This is the moat that JD.com has. The scale and efficiency becomes better, the logistics service becomes better. They're just gonna keep lowering prices, driving up margins, and just getting more items out there, improving GMV, getting more 3P sellers on the site, just delivering more products. Collectively, the number of our total quarterly active customers continue to grow at double-digit pace year on year in Q2 for the third consecutive quarter. I want to reiterate that our goal is to serve users across different income spectrums and demands with the right product, right price, and serving offerings. This just shows you that people continue to go to JD.com. On the back of these high quality results, we continue to step up efforts to return value to shareholders. Q2, we repurchased a total of 137 million Class A ordinary shares, which accounted for 4.5% of our ordinary shares outstanding as of March 31st, 2024. The total value of the shares repurchased in Q2 was 2.1 billion. In the first half of this year, we bought back a total of 7.1% of our ordinary shares outstanding as of the end of 2023. The progress reflects our commitment to creating value for our shareholders. And this is why I'm super excited for JD.com's future. In order for JD.com to be a great investment, they don't need to do crazy things. They already have a 19% free cash flow yield. You see them generating $8 billion of free cash flow, giving us a 2 to 3% dividend yield, reducing their share count by like 7 to 9% annually. So guys, they're just doing the right things right now. They're improving their business, getting a lot of users to their website. If you think about the earnings call for JD.com, like and subscribe to my channel.